The Hedgeless Horseman here. It's April the 8th, actually already April the 9th, 2025 here in Sweden. First of all, thanks to the sponsors. Uh, Today was a very fun day. Let's see if I have that. Yeah, I mean, this is the NASDAQ 5-minute chart, I guess, or the last few days. I mean, it's just, woo! I mean, you would never think this was actually a market, if you know what I mean. It's like, okay, gap down, or gaps down, trends up, gaps down, trends down, gaps down, trends down, gaps down, huge push up, turns around, goes down, goes up, goes down, gap up, trend down. I mean, if you need more evidence, well, I guess especially during this kind of market, I mean, I have no idea I mean, if you're a, let's say, day trader or whatever, I mean, how are you going to work in this kind of environment? It's like, where are all the patterns, you know what I mean? But it's just, I mean, I try to make it simple for myself. I focus on one thing: current value, future probable value, future potential value versus the price today. That's it. Or it's like, that's 95%. Let's say, I'm not a market timer. I have no idea. I had no idea this was gonna happen. The market obviously had no idea this was gonna happen. Yeah, I mean, I control what I can control, and since there's so few people who actually do it that way, I mean, or let's be honest, if price versus value, or it's like, if value was actually something people cared about that much in 2025, the mining sector wouldn't be this cheap. Because otherwise, why would anybody pay PE, whatever, record high PEs for like generalist stocks or Mag 7 when they could be buying extremely cheap gold juniors? Well, institutions that buy Mag 7 can't even buy gold juniors. I mean, that's one part, of course, but there's no reason why, retail couldn't buy gold juniors, for example, and they've never been cheaper. So if there was ever a time, at least that I've seen, and I mean, if you listen to Rick Rule and Ross Beatty and those people, they say they have not seen anything like this in 40 years. So if there was ever a time that anybody that have the slightest interest in bargains, that price is too low, as the sector is undervalued, they would be investing now. Right now, they would be piling in. We wouldn't be this low if they did, of course, but it just, I think, proves the whole point that price to value is an afterthought. This is a very, very neglected sector, and like Charlie Munger, I think it was, said when he was asked, what would you do, or how would you do it if you had to start over? Or it's like, what advice would you give someone that has a small amount of capital to invest? And he said basically that he would go to neglected sectors. He would play where few institutionals, etc., are playing, where there's a much bigger chance that there are some wild bargains, that the market is not efficient, that the market is not fairly pricing stuff. It comes with illiquidity and all that, emotional sectors, yada yada, unfollowed sectors, all of that. Obviously, that kind of fits the description perfectly on the junior mining sector, and that's why. I mean, when I look around, I mean, I'm not an expert on many other sectors, but what's the opportunities around? It's like, I mean, you see NASDAQ or S&P 500, whatever, it goes down 20%. And it's still in the historically overvalued range. Overvalued range. or in the high end of valuation. Let's put it like that. That's not even a bargain after it's gone down 20%. And people see that as, let's say here, for example, oh, it's like buying that dip. I mean, think about it. They're playing around, have been playing around in an increasingly overvalued sector, while there is dirt cheap stuff in the mining sector. But nobody knows about it, nobody cares, nobody can find it. Nobody looks at those charts and get excited. That's the big thing. I mean, yeah, so I mean, right now, oil is crude oil VTI is actually below 60. That's obviously very good for producers, miners, because this is a huge input cost, especially for open pit miners who have a lot of fat trucks. Gold still around all-time high, down a bit, of course. Silver getting sold a bit. Copper has had quite a few tough days. Bond market is going up. It's actually retraced the whole move post tariff, so I think rates are actually going higher. Crypto is getting kicked in the teeth. Stock market is selling off again. I mean, I wouldn't be surprised. I mean, this is kind of, I guess, what one might expect, that it's, every other day basically. And that happens in bear markets, that you have these declines, and then some. I mean, some of the biggest rally days comes in bear markets, counter trend rallies. I'm not trading shit. I'm not trying to predict anything. If gold goes down to 2,500, many of these juniors are still dirt cheap, and with crude, for example, and other input costs, like, I mean, you obviously need copper in every electronic circuit, for example. And given that there's, talk about, well, there's dislocations out there, obviously. I mean, I would think that a lot of companies are scared, and they might not, let's say, add as much inventory as they would otherwise, or maybe there's simply less demand for the product. So I probably mentioned this in the last video, but it's like, I wouldn't be surprised if there's less capital investments, let's say. There's less expansion, so, of whatever business. What does that mean? Well, I mean, if you would want to buy whatever that requires electronics, steel, aluminum, yada yada, and that goes down in price, obviously that means that the cost of building that stuff goes down. And if there's less demand for the finished product, that means that, hey, maybe you need to lower price even more, or other people aren't bidding it up. So who knows? Maybe since tariffs, maybe it's potentially a bit cheaper to build anything. Let's say outside the U.S., because the markets are, I mean, so U.S. focused, and are talking about how this is gonna create inflation, for example. Yes, I mean, for the U.S. it makes perfect sense, because they're putting tariffs on every single import. But for the rest of the world, I mean, well, I guess some are putting up tariffs on the US, but I mean, right now it seems to be mostly a battle between the US and China. China hiked their tariffs on the US, and the US, I think, hiked their tariffs on China. So yes, if you're building a mine in the US or China, and you need parts from the other country, might have to pay up a bit. But for everyone else, again, who knows? I would think operating costs have gone down with, again, the drop in oil, a pretty severe drop in oil. And also, I mean, in uncertain times, labor costs. Who knows? Maybe there won't be as much wage inflation, for example. So I mean, if this picture holds up, gold at 2,986 and oil is here, yada yada, and all this uncertainty crap going around, I think we're set up for a new record quarter for especially gold miners. So it's basically might be the only one of the few sectors, at least in the entire world, that is reaching new peaks of profitability. It's like Nvidia saw its demand for its GPUs just keep hitting new highs, and they had record margins. So that's the thing. It's like fundamentally the value of the gold miner is probably highest ever on a per ounce basis. But they got sold as well, which is another point or another example of why I think GDXJ went down like 10% 2 days ago or something. Was it Monday? Which is again absolutely crazy. It did 10% of the entire long-term value for every company in the GDXJ go down 10% in one day, while their business might actually have become even more profitable. No, I don't think so, right? But that's the market for you. It's on a day-to-day basis, it doesn't make sense, and I'm going to show a pretty interesting thing later. Also, I mean, this is, I think I talked about it last video. Everybody's looking at, well, okay, the tariffs are creating these dislocations, especially, well, the U.S. and the some of the exporting countries that export to the U.S. But at the same time, I mean, what they're saying, what the Trump is saying, is that he wants onshoring. He wants to build stuff in the U.S. What's that gonna do? I mean, if you have 1 million factories all over the world that are built, they have all the copper, aluminum, steel, and what have you that were needed to build those factories. They've already been bought and used. Yes, you can obviously recycle stuff, but if you're gonna build 1 million factories, now I'm just making up a number, of course, but if you're gonna build 1 million new factories, plants in the US, that's obviously going to require all kinds of commodities. So now we've seen what the shock did, and I assume that's because the fears of recession. But what if we don't have that fat of a recession, but we also have, or not a recession at all, and we have onshoring, new capital investments that all require more commodities. And then again, you have headlines like this. Justin President Trump says we need more than double the electricity we have now. The US is not a small country, as you know. Imagine doubling the electricity. How much copper does that require? How many power plants would that need? How many, etc., etc.? I mean, obviously, it's one thing is saying that they need to do it. Other thing is actually doing it. But I've heard people talk about the crap state of the U.S. electrical grid for a long time, and there was been blackouts, I think, in Texas and California and stuff. So I mean, imagine reindustrialization in a sense in a country as big as the U.S. So again, who knows? Who knows? Maybe we're gonna see copper at $6 in 6 months. I don't know. Everything could go to shit as well. Then obviously gold and stuff probably gonna fly. But I'm just saying, that's the thing. It's so hard to be linearly thinking. It's like, I mean, again, just look at the Nasdaq. Like, new stuff happens and that starts to get priced in. It's like, oh, okay, now there was a rumor of tariffs being lifted. Okay. Uh, Obviously, that's probably good for the markets. And people were like, ah, bottom is in. And then that was apparently a false rumor, and then they sold off. And then they, I guess, bounced a bit, and then they sold off. It's getting seesawed, and because there's stuff coming out on a daily basis that changes the trajectory of the current trend, let's say. I mean, it's like 2008, 2009, and what happened afterwards. If things would have just played out, I mean, you hear people say that apparently, I mean, the Fed that did a lot of stuff that was actually illegal to save the system, and nobody even had it in the textbooks. A section of having negative interest rates. That wasn't even a thing to get paid to borrow. Still, it happened. So they changed the rules of the game, because mathematically everything probably should just implode if you were to follow the law and follow any sensible economics theory, which does not include, I guess, negative rates. But that's also the things with markets. Like, things have consequences. I mean, something happens, a trajectory is down, or take COVID for example. Felt like the world was ending. Then the U.S. and everybody that needs voters, let's say, respond to that pain. Sends out, I don't know, $2-3 trillion, whatever. All of a sudden we have huge inflation. And I mean, it didn't take that long, I think, and we had new record highs in the markets. So that's the thing. It's like every path kind of gets, I don't know, stuff is gonna happen that, especially to the downside. I mean, it's not really the policymakers' priority to keep the lid on a bull market. You know what I mean? But they for sure are gonna react if something happens to the downside. So I have no idea how everything's going to play out. I have no idea how the world is going to look in 6 months. All I know is, are there things that are cheap out there right now? Are there even stuff that's dirt cheap that the current environment, let's say, could turn out to be, well, the future could turn out to be much worse than it is today, and it would still look cheap today. Do we have a margin of safety? I would say still, and I've said this for quite some time, I think gold juniors have, and that's not just me saying, but it's like they have never ever been cheaper relative to the current fundamentals and the margins of the gold business. Gold being produced right now, gold in the ground that's taken out of the ground, has never had a higher value per ounce. So it's almost like, yeah, I mean, gold price is at all-time highs already, so I guess that fits. But I hope you get my point. The gold business has never been more profitable. A gold mine has never been worth more than it is today. The gold juniors that have gold in the ground and future mines, let's say, I mean, they're selling like there are no real margins in the gold business, and that the gold business is crap and all that. So that's a huge margin of safety. There's plenty of juniors who would have absolutely great NPVs at a $2,000 gold price today. So gold could fall like $1,000, all else equal, and they would still be cheap today. That is some absurd margin of safety. Compare that to the, let's say, general markets like the S&P and Nasdaq, who after a 20% decline are still kind of overvalued, or maybe very overvalued. That's no margin of safety. I mean, that's basically why Buffett started to sell his Apple stock, and I think he sold Bank of America and what have you, because they were, I guess, too overvalued. So now, I mean, he got shat on when he did it, because the market went up after he did it for a while, and now he's looking super smart. And he, I think, is the only billionaire in the top 10 that has seen his net worth increase this year. Which kind of goes to show that, I mean, in the end, the common sense connoisseur, the stick to the basics kind of price versus value investor like Buffett, tends to look right sooner or later. I don't think he necessarily knew that when the market was gonna do this, but like if it's overvalued, then the risks are to the downside. Anyway, so yeah, I mean, I think this is a pretty good concept. Let's say I just looked back at. I find it interesting to just sometimes go back and look at. I mean, because most people have never been in a. Well, they've never seen a rally. They've only been in this sector maybe since 2020, and that's 5 whopping years, and they've never really seen any good times. I mean, not the, not the insane rallies which this sector is known for. Not always, of course, because I mean, since 2011, it's been known for its bear markets. But like that, this it has also volatility to the upside. So I just went back and looked at. I think this was pretty much the bottom of the COVID flash crash. This again, this is a great example. This is the gold price, purple line, highest since, well, here, not too, not too long ago, and also highest since here and here. And then you had the GDXJ trade up. Well, it traded at this level, and this level, and so basically around here, right? When gold was at this very level, whatever that was, let's say 1700 or 1600, I don't remember. But instead of the GDXJ trading here, it traded down here. This is the single best example of a totally irrational panic selling market, stop losses, margin calls, sell what you can and all that. Total panic. This was the most obscene thing ever. Value was up here. Price went down here. That is one of the, probably, except, well, I don't think the gap is that big in GDXJ today actually compared to the gold price. So this was the single best buying opportunity probably there's ever been in the mining space over the last, I don't know, decades probably. Well, I should say in the GDXJ, not in the mining space. I think juniors are actually even cheaper now than they, well, maybe they were actually as cheap, or some were actually cheaper back here. But compared as to 2015, a bottom that I also saw and bought, this is the gold price. $1,100, $1,200. Gold price was shit. Almost no mine was profitable. Only the absolute best mines were profitable. No pre-development project had any good economics. Basically, well, nothing sub tier 1, I should say. Miners were actually kind of going bankrupt because they had a lot of debt and all that, or they were risking to go bankrupt. I mean, Barrick sold a bunch of assets, whatever. But here you didn't have any price to value gap really. Here you bought it because the sector was historically low, I should say. Not necessarily like super cheap, because again, at the time, the gold sector wasn't worth much. So you were buying, I mean, I was kinda, I guess, buying some uneconomic or break even, let's say, mines or development projects. Then gold went up. All of a sudden, the juniors went from being worthless at face value to being worth something, because silver went up, gold went up. And then you can see what happened to the GDXJ. I mean, it kind of way overshot, I would say, the gold price. And this was probably, it reached overvaluation. But this was the single best quarterly rally in the gold space ever, I think. It was absolutely incredible to be part of this. My portfolio went from being down 54% to being up, I don't know, 260% from this period here to that. Oh, you can't even see it, but yeah, well, you can. From here to here, first down 50%, then up 500-600%. So overall, a 260% return. Then my portfolio went down 50% over 3-4 years, and you can imagine how fun that was. Then it went up a few 100%, then it went down, say 50%. I don't even remember much from this. It happened so quickly. I was mostly focused on COVID at the time. I didn't sell any. I mean, I wasn't that long anyway. But obviously I got kicked in the teeth for a while. But then that turned around. So it's like, I did this tweet. And it's like, when fundamentals doesn't matter. And I'm obviously referring to, this is, let's say, the value of the gold business. This is what someone is willing to sell their ownership of said business that's actually worth this much. Obviously, that's not rational selling, except unless, well, no, that's not rational selling by definition. But let's say, what was this pricing in? That gold would drop from, I don't know, 1600 down to 1200. Oh, well, obviously, well, we later found out it didn't. But at face value, this is bullshit. This shouldn't, happen. So what happened after and you can imagine, this is not easy. You might think it's easy for people to buy this because, yeah, you buy low, sell high. No, this was sheer panic. The world is ending kind of things. Traders were selling because they saw the resistance zones being broken, etc. I've heard, some, let's say, quite famous TA gurus, or I mean, I don't know if they're good or bad, and guru sounds maybe like a bad word, but you know what I mean. It's like, I mean, let's say professional chartists, whatever. They were selling this because, I guess it was because the GDXJ broke resistance zone. So everything was screaming sell. Momentum was down, emotions was high, world is ending, broke a bunch of, so everything pointed to sell except for the fact that this is the largest price to value gap this sector has probably ever seen. So I'm not really keen on selling when you have the most extreme bargain in decades, let's say. Well, what happened after this, when fundamentals didn't matter? Well, until suddenly, without warning, gold didn't go down to $1,200. Gold actually went up, started to go up, went up to 2,000, and this was a 230, let's say 6% run for GDXJ within, I think this is 6 months. That's one of the most impressive rallies I've ever seen. And I'm going to show this soon, but down here, if you were just invested in GDXJ, you bought every month or whatever you did, trying to, average down, let's say, you thought it was cheap. Every single buy you ever made since 2016 at least, well, actually going back further than that, which we're going to see, was in the red. Your portfolio would obviously be down, even if your average was around here. You would be looking dumb at every single buy you've done for the last several years. 6 months later, you would be up on every single buy, 100 out of 100 hit rate. Let's say you did 100 buys over this period. Here, you're 0 for 100. Here, you're 100 for 100. Here you look like the worst investor in the world. Here you look like a genius. What was rational about this? Not much. What was the opportunity? People are gonna, at this low, people are going to say, whoa, there's opportunity cost in the miners because they're looking at what happened. If you actually cared about price to value and had the idea, well, this is whack, the miners are worth at least this much, they're trading down here, I'm going to buy that because, hey, sooner or later, they're going to be reflecting the intrinsic value. Well, that came a lot quicker than anybody expected, of course. But again, this was the best buying opportunity, not just based on the rally that happened, but based on a cheapness level. The gap here is so extreme again. They've probably not seen that for decades, and that ultimately led, and it didn't take a long time, to one of the best rallies I've ever seen. And then that topped. Let's see here. So yeah, the difference between the worst investor ever and a genius can be 6 months in this sector, but you never know when it will happen. But you know if you look like a genius or not. So this is an updated chart. So here you have it. I mean, just to kind of prove a point in a sense about how the market doesn't know anything. That's what it's like when people say it's like, oh, the juniors, they know something, they're pricing in something, they know something's going to happen. The large producers aren't pricing in that because they're not that cheap. They've actually gone up. Not everyone, but the ones that have actually, done good work and, let's say, kept costs under control. I mean, Alamos Gold, I think, is around an all-time high. Agnico Eagle surely is around an all-time high. Lundin Gold recently was valued at $10 billion on one profitable gold mine in Ecuador. But so my point is, and I actually have there's a junior chart that might be even better. But anyway, I mean, let's put it like this. This was maybe how much was this? Maybe a few 100%. Did Mr. Market down here during this period know that the Mr. Market would be pricing stuff up here within a year? I don't think so. Why? Because the returns from anywhere near these levels in a year to this level is abnormally high, which you would be happy to have for, I mean, again, in the junior space, I started buying around, I guess, here in the junior space, went down 50%, up 500-600% in the portfolio of only juniors. Did the people that AK Mr. Market that was selling juniors to me on the way down here, did the market know that the juniors would go up 500-600% within a year? Obviously not. Had no clue. Absolutely no clue. That's a black swan kind of, black swan type returns. That's why it's like, I don't give a shit what the market thinks. I don't give a shit what anybody guesses something is where the economy is going to go or yada yada. I look at price to value. Here they weren't even cheap at face value. They were just extremely lowly valued. Well, that turned out very well. Here they were very low valued, plus the cheapest they've ever been. Also another epic thing. Now in this sector, obviously, well, okay, it's cut off at 2020, but I think the GDXJ is up here somewhere. So it's like, fact of the matter is the GDXJ has been in a bull since 2015. It's not been quick, and it's not been a lot of big highs, and still been pretty much 80% down, 20%, pretty much that, 80% down, 20% up, 80% down, 20% up, let's say. So it's not a fun sector for a lot of people that watch the market every day. But within a span of 6 months, up here, every single buy in GDXJ going back here was in the green. Up here, you could look back and say, wow, anytime any purchase I did is in the green. 6 months earlier, you would be telling or saying, this is the shittiest sector I've ever been in. All of my purchases, going back to, well, all of these would obviously be red as well. since, yeah, I don't know, 2008, 9, let's say 11 years or more, every single purchase would be red. And here, every single buy in 7 years would be green. So if you just average down this entire time, your portfolio would at least, even if you started buying at the top, would probably be green at this point in time, because the periods of being able to buy low were so long. I mean, think about that, how crazy that is. What's my point? My point is, this sector always goes down and will always go up. Do you think anybody had a slightest clue that this was the bottom? No, it broke resistance lines, it looked dog shit, obviously, because everyone was looking at this. The sector was dead, never to return. Same thing here after 3 years at least of nobody cared. Absolutely nobody cared. And you can see even the rallies just became smaller and smaller and smaller and smaller. Nobody had anything to celebrate, not even, really a few months to celebrate a lot. I mean, yes, you had this pop here, but it's like mostly everybody was just grinded down. Volatility contracted, and if that was not enough, then the volatility happened to the downside. So that was like the straw that broke the camel's back, and that just happened to be the best buying opportunity since, well, I guess basically, this period here, and then later on an even better opportunity would present itself. My point is, when has anybody ever lost in the mining sector if they bought cheap or bought low, whatever you want to call it? Pretty much never, because it's a cyclical sector. That does not mean that every company will be around. That's the thing, because I see people, even some followers, and they say what they have in their portfolios. Now I'm not doing, I'm not a portfolio manager for other people, but it's like I kind of a bit fear for them, because like I talk about cyclicality and cyclicality and copium and psychology and all that. But it's like my number one thing, I'm a stock picker. I don't own the GDXJ. I don't own the GDX. I don't own Barrick. I don't own Newmont or Agnico. I don't own Alamos Gold. I own the cheapest juniors I could possibly find. And that includes adjusting for quality and all that. That's my job, to own the cheapest freaking stuff I can find. Because you can obviously tell that the sector overall, when it's cheap, when it's low, sooner or later you're gonna make a shit ton of money. Assuming you haven't diluted yourselves in shitcoins, or the shitcoins haven't gone bankrupt or anything like that. With infinite patience, it's ought to be near damn impossible actually to lose over the long term. Any given year, I mean, I lost money probably, let's say, over 4 years here. One could say, well, that's freaking long term, 4 years. Everybody expects to be in profit on anything they buy after a week or tomorrow. But yeah, so what? Yeah, 4 years of suckage. Did I know that was going to happen? Obviously not. And then all of a sudden the portfolio had reached a higher high, after also getting kicked in the teeth in between. But it reached even maybe overvaluation. So up here, huge overvaluation, probably overvaluation. Now I don't think we actually even reached overvaluation even in the producers. But that's obviously a good thing if you're a holder or an investor. It's not like you own Mag 7 and it goes from the most extremely overvalued levels and down 20%, where it's extremely overvalued still. Because I mean, take an easy example. Let's say you have something selling at a PE of 80 or something. Yes, it's a high growth stock, yada yada. But it's like, oh, things can't possibly get any better, and it's not like the mining sector where it's like, well, we have more obvious supply issues. Whereas, I mean, Nvidia could probably bring another plant or something on in, I don't know. Actually, I actually don't know, but it's like, well, it's probably not going to take 17 years, which is the average from a discovery to putting a mine in production in the mining sector, you know. Um, but yeah, so if you have a PE 80, meaning the market cap is 80 times what the company earns net profits in a given year. So it would take you 80 years to get your money back if all those earnings would be dividended out to you. Well, what happens if 80 PE is like huge overvaluation, and for a, let's say, a growth stock, 40 would still be okay, let's say, again, for a growth stock? Well, that means it has to go down 50% just to trade a P of 40. But what if things get the economics get a bit worse? Maybe less customers, maybe whatever. Maybe the AI bubble implodes, something along those lines. And let's say the profits fall by half. Then you have a real problem, because if if PE 40 is okay and the profits get cut in half, what's that? That's 50% lower, and then 50% lower. So you're looking at a 75% share price decline just to trade at PE 40 at half the annual profits. That's some risk to the downside. The mining sector might be trading at, I don't know, who knows? I haven't looked at producers lately. If you look at the junior sector, well, there are many companies out there, and the ones that don't even have a huge capex or anything like that. But let's say they're trading for half of what their project would throw out off in free cash flow if it was in production. That's pretty effing cheap. That's margin of safety. So I mean, this is, I think, I'm not gonna say a good test, but I mean, Mr. Market sells down your favorite junior. Impulse response alternatives. The market knows something shit. I mean, that's basically the most common reaction. B is that you think, haha, what an idiot Mr. Market is, which everybody should think when this happened. It's like you're sitting there, it's like, hey, my gold miner is making basically the same profits it did 2 months ago. Price is down here. Value of business up here, price down here. What the hell is Mr. Market thinking? Then you would have obviously bought. But if you were, let's say, I don't know, a trader, or you had no idea what you owned, you have no idea what is cheap, you only bought it because, well, it's going up, and people are saying that gold is going to hit $2,000, so I'm going to make money. This happens. You have no idea how cheap the stuff is that you own. Everyone's hair is on fire. The world is ending. Traders are jumping ship, showing. You see a flood of charts on Twitter showing how many resistance lines were broken. Are you going to be buying that? I don't think so. A will make you want to sell. B makes you want to buy more. A means you don't know what you own. B means you know it well enough to have strong conviction. No conviction, out to lose. Yes, no conviction means you're going to buy high and sell low. A lot of people out there, and I see them on Twitter as well, I don't think they know what they are invested in. I don't think they know even what maybe the thesis for their junior is. Or their juniors. I don't think they have I don't think they even have a base case what they think the news might be, or the next 6 months or something. And I also see people sitting around in kind of failed cases. I mean, to be fair, yes, you have some cases that failed and they reach absolute micro cap levels, and the project is still kind of. I'm not even gonna say the failed project wise, but management wasn't able to raise money, etc. It's like, I mean, one example I guess of that is like SK Mining. I think the potential in their project is huge, but it went down the well. I mean, subpar exploration results, with big raises and dilution, all that. So they got cut down, entered a dilution spiral in a bear. When the bear market got going, and then they became less exciting because they didn't raise, because they didn't want to dilute. So it became a boring stock in a bear market after disappointing results. So the stock is down like 80% or something, or maybe actually more from the absolute top. But you can kind of see how that stuff happens. So in a sense, it sure looks like a failed case, but geology-wise, not much has changed. There's still plenty of potential there, and there are other juniors out there which, let's say, they raised money, drilled some holes, market didn't really care, went down, they couldn't raise money or didn't want to raise money. So people sell out of boredom, and the market knows they don't have cash, so they know they need to raise, and that's again like dangling a bad carrot in front of the market, because everybody kind of knows that there's no way to get rich in this stock, and if we are to be rich, they need to, let's say, drill something, and to drill something, they first need to take in money, which is, in the eyes of the market, is always this. The worst thing that can happen, dilution, even though it's like, yes, that comes with the territory. The idea is obviously if you raise 5 million, you want to create 50 million of value or more. But anyway, that's what happens. So yes, there are some cases that look absolutely, well, they're absolutely obliterated, but they aren't necessarily failed cases. But there are also failed cases out there that have been obliterated. And your portfolio is not going to thank you for sticking around in failed cases. I mean, now, for example, we have the cheapest sector there's ever been in the last at least 40 years. Do you really need to stick it out in a failed case when there's plenty of stuff out there that is so cheap that they have 2 to 20 bagger potential? I mean, some have theoretically more than that, of course. And then it's, I mean, the higher the potential, obviously, the lower the probability. My point is that what's best? You have a failed case, like legitimately failed case. Their targets missed and all that, they don't have much. And assuming they're not so cheap and so illiquid that you can't even sell. Let's say you still can sell, but who's going to thank you for sticking around in a case where it's like, yeah, they better find some other project down the line, which is probably not going to be the best project. Because that's, I mean, most projects that are getting picked up are recycled projects and all that. So you're really waiting for a turnaround story that may or may not happen when there's like good quality stuff out there that again has like 2 to 20 bagger potential. So if you're down 70% or 80%, so you invested $1,000, you have $200 left or $300 left. That $200 to $300 in a totally different case, intact story, just absurdly cheap with huge, let's say, potential, that could turn into a few $1,000s. The portfolio is going to thank you for reshuffling that into the best or much better place. I mean, it makes perfect sense, but a lot of people are stubborn. I hate selling low. That's my number one fear. But I have no problem selling something that's low at a loss if I can buy something else that's even cheaper. Because then I'm creating money at the time of the transaction. Expected future returns go up when I do that. I take my $300, that in the failed case has a future expected return of, who knows, maybe negative, and especially long term. Let's say, I mean, if we're going to a raging bull market tomorrow, everything will go up, but you don't know that. But I put it in a case where I think the expected value is, or expected return is like 200-300% with the free optionality on getting a 10-bagger. Yeah, that's pretty sweet. I can take that loss, and sooner or later that's probably gonna that $300 is probably gonna overshoot $1,000. As I talked about. Okay, so let's go through some companies. How long have I been talking? Okay, already 50 minutes. Typical horseman. Let's go some rants and rants. So this is wait, 1 second. Oh yeah, okay. Well, actually, I'm gonna look at that later. So this is one of the newer additions to the portfolio. Westward Gold, a new horse in the high risk, high reward stable. With I participated in the placement, and I got warrants with that, which skews the risk reward obviously, and I talked about that a lot of times. Quinton likes it. I've talked to him, and you can see. I think it was mentioned here in the forum. Yeah, this is from Kevin of Crescat mentions this, I guess, in the news release here, because oversubscribed non-broker private placement, strategic investor Crescat Capital acquires 10.3% stake. So they exercised their over-allotment option. So they took basically as much as they could, I guess. Kevin Smith says, when Quino told me this was his favorite freaking target in the entire state of Nevada, how could I not be intrigued? At Crescat we provide yada. So I talked to Quinton as well, and he said the same thing to me. This has been, I had never heard about this story until maybe 2 weeks ago. But this is, or has been, his favorite target in all of Nevada. Apparently there was a lot of, this was like a fragmented ownership, so nobody actually owned the whole district or target, let's say. So I guess nobody really wanted to do any work because nobody had the whole thing. And you hear about that sometimes, that a company might spend years just to basically patch together a land position that controls all the real areas of interest, let's say. So I mean, I just need to hear that. When Quinton described it as that, it's like, okay, I know I'm gonna try to get a piece of this placement. Thankfully, I was able to. And then I started to read up and had a chat with the CEO, a young guy, and it's like, I remember I looked into the SEDA filings. It's like, okay, I think this is to, sell to exercise warrants, I guess. But it's like, okay, he participated privately, buying in the open market, buying in a PP, buying in the open market. So the CEO, he's I think he's quite a young guy. He looks very young. Andrew, he has a lot of skin in the game. Let's check how much does he own. He owns like 8.35 million shares. So he's obviously eating his own cooking. And if you look at, let's see, didn't I? So one thing to note, this is their flagship project. This is Cortez Hills. This is the Carlin Trend. This is the Battle Mountain Eureka Trend. So this is basically elephant country for, some of the most famous deposit types there is, which is the Carlin Gold deposit type. Here you have, how much is there? I think there's I think it's. I thought they showed endowment. Okay, maybe not. I think I looked heard in the video whatever that I think there's around 60 million ounces here. 60 million ounces of gold. They're 10 kilometers from that. So here you can see how they patched it together. Basically 5 different land claim blocks now belonging to one, and you can see okay, one was staking, M&A. So this took obviously some years. 2021 it started, and now it's 2025. But those are some of the interesting stories. Like, you know, I mean, if you spend that much time trying to get this package together, then you probably think it's going to be worth it. One thing to really note, I would say, is look at the people that's involved. You probably recognize quite a few of these companies. I mean, this, for example, Robert Eddy, 14 years experience working as an exploration geologist in Nevada, Carlin type deposit, exploration manager Jared Canyon, formerly project geologist at Dark Star for Gold Standard Ventures, which got sold. Here you have Kinross, president director of Chakana Copper, Mavericks Triple Flag, CEO of Midnight Sun, co-founder of Rocks Gold, Fortuna Silver, and here you have the advisory team, Gold Standard Ventures, GFG, Evolving Gold, Miranda Gold, Cortez Gold Mines, Newmont has been directly involved in 11 Carlin-type gold discoveries, 6 of which have become producing mines. Past senior geologist on initial discovery team at Cortez Hills. Cortez Hills is here. So he led the discovery of this Carlin giant. He's with them. Matthew Lennox King, he had he was CEO of Contact Gold, which got sold to who was it? Magna Mining, CEO of Pilot Gold. I don't really recognize all of them. All of these. Evrim, yeah, Evrim I remember. Okay, Origin Royalties. I don't know who that guy is. But there's some pretty fat resumes involved in this 10 million market cap junior. Here you have Nevada Gold Mines, Barrick Gold have some claims right next to their package. This is the thesis. This is West Leeville. Here you have I think this is the Venban formation. And you here have the gold deposits. And this is how much? Well, I don't exactly know. It doesn't say. This is the interesting things. Like I know, you know, I've been, you know, I've been punting in some Carlin juniors. Like what's the name? New Legacy, for example, who were drilling. I'm not. Well, yeah, kind of blind holes actually. Trying to hit the Venban formation at depth, and Nevada King has also drilled that. I don't remember the name of that target, but they're doing deep drilling. Funny or very interesting thing here is like it's the Venban formation. That's at least one of the host rocks that is basically the main targeting in Nevada for Carlin Gold mineralization. That's outcropping here. So you don't need to guess that they have the Venban formation. It's literally outcropping. And here, I mean, you should watch this. I recommend watching this technical presentation, because then you really get a sense of how much thought has, how much time these very, very smart people who have made Carlin Gold discoveries, how much they have thought about things, and everything kind of points to this being where potential Carlin Gold giant would be. They've done everything like structurally altered zone. I mean, they go through everything. I don't, you know, I can't regurgitate everything, obviously. But everything is kind of geophysics, mapping, geochemistry. Everything is pointing that this is the main area of interest. This would be kind of the feeder. And here you have, for example, this is arsenic anomaly, and like they say in the video presentation, Carlin gold deposits are actually arsenic deposits with some gold in it. So if you see arsenic, that's a really good sign. It's arsenopyrite, and they are typically refractory. Here you have the footprint of the Cortez mine, arsenic footprint pre-discovery, shown to scale. 500 ppm, 9,700. Okay, I can't really tell what, I mean, I don't know where the, you know, they would have a 500 ppm outline, but what we can say, okay, it's a huge, you know, a few kilometers long footprint of arsenic. And again, that's what you want to see, because Carlin deposits are arsenic deposits with gold. And as they kind of go through in the presentation, you can see that it's kind of, I mean, it looks like this might be, you know, the spread out zone, let's say. It's emanating maybe from here, and that lines up with everything they kind of know from the structural interpretation, whatever, resistivity and all that. So they have and here you have the Venn band formation. So their or what they believe, when they add everything they know together, this is what they what it looks like. And this, you can see potential gold deposit, basically the feeder zones, and these can be over a kilometer in vertical extent. But as they say in the video, they should kind of be in the system after just a few hundred meters. Because that's the thing I've heard with Carlin exploration, for example. It's usually quite expensive. I mean, a lot of the discoveries are deep nowadays. Why? Because the near surface stuff has been found already. But this target here has never been drilled, where there's actually Venn band outcropping. Plus, you don't really need to guess that there's Carlin gold here, because this is this, I think, well, this is actually a resource, I'm pretty sure, with oxide Carlin gold. And I think here you have the past producing mine. So basically, Carlin gold has been mined here, oxide Carlin gold. So they're not guessing that there's Venn band, the preferred host rock. It is there. They don't need to guess that there's Carlin gold here. They already know there's Carlin gold here. I mean, there's some historic, I think, intercepts from that deposit. Where's that? I think I scrolled past it. Yeah, 19.8 meters, 4 grams per ton, 18.3, 4.47. Yeah, I mean, those are some pretty, and here you have the past producing mine. So we know there's Carlin gold here. The big prize is to find the feeder, what created that. And again, as we can see here, arsenic coming out, and arsenic, I think the mine is down here, the old Barrick mine. So basically they believe this is all leakage, that this is all leakage that's traveled out from the upwell zone or the feeder zone. So everything again points to this area being the most probable place that is the source of the Carlin gold around. So this is, and as they say, I mean, the footprint is huge and all that. I mean, the arsenic footprint is huge. So this is definitely elephant hunting. And I mean, I was a bit skeptic first, even though it's like, yes, I I can see that. I mean, if Quinton says it's his favorite target in Nevada, uh, that is known about for a long time, but it's never been drilled. Yes, then I obviously am intrigued slash interested. Uh, my initial thought at the same time was like, oh, Carlin exploration is kind of tricky. I mean, that's why Ridgeline, for example, they've Barrick is earning in, or Nevada Gold Mines, I guess, is earning in, because that's very deep or quite deep drilling. I think they're doing kilometer deep holes to try to find mineralization, economic mineralization. So that was the biggest positive surprise to me, that this is actually apparently one of few places in Nevada where the Venban formation is outcropping. And they have some other slide. It's not here, but it's in the video where they show that there's not a lot of places like this in the Cortez Trend. Okay, how do I look here? You have a Cortez Hills shown scale. This is 10 million ounces. I mean, if you made a Carlin discovery, even in this shitty market, obviously I would think the stock would go absolutely, well, bonkers in a sense, because everybody knows the price. I mean, this is a big Carlin deposit is obviously, I mean, kind of a company maker. That's what I think Newmont was built on that, or if it was Barrick, or maybe both. One was Goldstrike and the other one was like Cortez. Anyway, might be the best jurisdiction in the world and all that. Price is huge. Elephant hunting price. What is the chance of success? I don't know. Post PP close, I guess. I don't know. Maybe the market cap is a bit higher than this, but it really doesn't matter. Either they're gonna find some. Either there's let's say an elephant there. Either there is a multi-million ounce Carlin system here, or there's not. Then it doesn't matter if it's 8 or 15 million, really, because the price is, let's say billions of dollars. So it's a high risk, high reward case. I can only see what the share price is. I know that if they were to make a discovery, this will probably go up so much that, I mean, you don't need a lot of these to succeed for it to pay for a bunch of other ones. Yeah, this is not a bet the farm type situation. I'm actually kinda impressed and intrigued by the fact that it appears that, I don't know his financial position, but it kind of looks like the CEO is somewhat betting the farm on this. Maybe he's independently rich or something. Could be, or this is very much. I mean, he knows more about this case than me, of course, and he talks with these world-class geologists on a daily basis that have come up with this thesis. It just seems that he's throwing the kitchen sink at it as CEO, which is obviously very encouraging, and that together with the comments by Quinton and by the comments of the people that made several discoveries in Nevada. I mean, basically you can't, I guess, I mean, if you would want to ask anybody to evaluate something, it would be those kind of people. And then you have the CEO who's has been buying shares hand over fist. So I mean I have to take a punt. Obviously it skews the risk reward for me if you're in the private placement. That means more potential upside, but not more risk, except the holding period. So I mean, how anybody would play this? Again, this is not a buy recommendation, but if you like to punt, let's say on some high risk, I should say high risk, extreme reward stories, it might be cases like this, where it's like the target is obvious, the target is, I guess, relatively, let's say, easy to test, even though the footprint is so big that, I mean, well, we don't have a what is a plan map where you can actually see how. I mean, my point is that let's say this is the actual mineralization and they drill here, whatever, or it's I mean it's not like it might not be as easy as it looks here. That's like bullseye within a bullseye within a bullseye, but it's still not. They don't need to drill a kilometer deep holes just to test the theory and test it blind. Everything points to this being where you would expect the feeder to be because of geochemistry, geophysics, structural interpretation, anticline. But yeah, they go through that in video. So it seems to be quite a high conviction target. So I had to buy some. Because you never know. I mean, it would be epic if they actually made a new giant Carlin gold discovery at a time like this. I mean, that's, I guess, what the sector needs. Another one of these huge money makers that makes people, open to the idea that you can actually make money in juniors as well. But again, I'm not betting the farm on this. You can also do the other route, the lower risk route, where you wait for, because I never want to feel like let's say pumping something and well, now I can't sell because I'm in a holding period, but you know what I mean, where it's like, oh, the stock goes up 150% on anticipation when it gets better known, for example, and let's say greed takes hold, the idea of getting rich quick, and then it's like, okay, if I didn't have a holding period, I would need to sell, or probably want to sell, take money off the table because like there's no new information. It's just gone up in price. But that I'm quite uncomfortable with that, because then it actually does feel like you're pumping and dumping, if you know what I mean. So I just want to say that you can also do it the low risk way, where you let's say put it on the watch list, and if you see that, hey, in a couple months from now or a few months from now, it's like they made a discovery, or it looks like they're on the cusp of making a discovery, let's say, well, then I mean, if they just confirm that there's indeed, without hitting a barn burner hole, if they confirm that yes, there's indeed Carlin mineralization here, and whatever, they get 20 meters of 1 gram per ton or something along those lines, where it's like, okay, this is probably the feeder zone, but we didn't hit the high grade. I mean, that de-risks the thesis quite a bit, I would say, despite not having an actual discovery hole. So then you can punt. Yes, you might pay up 100% or something, but hey, maybe it's lower risk, and obviously the upside wouldn't be low if they actually make a Carlin discovery. If you pay 25 million or 20 million market cap. Because this is, I mean, who would want a multi-million ounce Carlin discovery in Nevada right now? Probably every mining company on earth, especially Nevada gold mines, of course. Kinross, probably. Anglo Gold, yada yada. And that's just the usual suspects in this case, I guess. So there's probably plenty of upside even if you wait and de-risk it a bit. This is actually Swedish only. Unfortunately I thought I would at least mention it. Maybe I'll do a Swedish video. Very cool story that I just found out about maybe a month or 2 months ago. Before I learned about this story, I had no idea there was even sediment copper hosted gold, silver, and sediment hosted copper and silver deposits in Sweden. So this is Kamua Kakula types stuff, Kupferschiefer type stuff, but in Dalsland in Sweden. They put out a maiden resource, you're compliant, of 55.39 million ton at 1% copper equivalent. 447,000 tons of copper and 37 million ounces of silver. Cut-off grade 0.8% copper equivalent. This is the extent of the deposit. So there's 55.39 million tons within this red stuff here. Interestingly enough, all these yellow areas here, there's where they've drilled the same type of sediment-hosted copper and silver mineralization. There's outcrops. I think maybe they have a map with that kind of stuff. Yeah, here you see outcrops. This is the scale. This is a 5 kilometer scale bore. They have a tenement package of 322 square kilometers. Less than 5% of the areal extensive target horizon drill tested. Stora Strand was a historic mine, actually. Interestingly, it had quite a bit of gold, copper, silver, and something else, I think, but apparently also strata-bound or sediment hosted. But here you have 1% copper, 1% copper, 1.78% copper, 40 grams per ton silver, 20 grams per ton. So it appears that, and here you have model target horizon. So this is 55 million tons, just in this red here. All the purple here you see is where they think the same mineralization might be present. I think you get the idea of, the potential size of the price here. And what is really interesting is that this resource is just based on historic drilling done by SGU or its predecessor, Swedish Geological Survey. This resource here is was done from only 14,000 meters of drilling. That is some of the, and apparently I've talked to management, like they think they drilled it too closely spaced because it's so predictable. So they over drilled it, so they wouldn't need 14,000 meters to drill this off really. And I hear in areas of Kupferschiefe and even Congo, for example, or and I think White Pine in the US, they drill like 5 to 1 kilometer step out holes to get an inferred resource, somewhere along those lines. You can fact check me, but that's what I've heard. That is some obscene, let's say, growth potential, where you step out 500 meters, not like 20 meters, 500 meters, and there might be a soon mineralization if they hit between that 500 meter step out hole all the way back to where they've already hit it. So if you can prove up 55 million tons with 14,000 meters of drilling, and that's perhaps too closely spaced drilling, how big could this, how much could you add with just 10,000 meters of drilling? And if you just look at the footprint, and that's not including the other areas here where they've already confirmed it's outcropping as well. So I don't know, if you just multiply this by, you could get up to the hundreds of millions of tons or even billions of tons. If this proved to be correct. Right now they don't have the kind of bonanza copper grades like they find in the high grade channels down in Kamua-Kakula. The belief is that because it looks to be so homogeneous over such a large area, this strike is, how much is this? I don't know, 20-25 kilometers, and they're finding the same type of mineralization. They believe it's distal to the upwell zone, the feeder zone. That's the theory they have, that there might also be feeder type mineralization like they have at Kamua-Kakula. If they find that would be perhaps even higher grades. But yeah, I mean, this could be a huge project. I think it has a market cap of 40 million CAD or something. So I have a small stake in this. It's only listed in Sweden. Uh, the family actually has a my grandpa actually. Well, he's dead now, but the family still has it. My grandpa grew up in this part of Sweden, and I've been to these areas before. I mean, I didn't know about this obviously, but yeah, this part of Dalsland I actually know, which makes it even more fun for me. Uh, so yeah, if we're talking, I mean, I like to talk about, okay, what's the ROI on drilling? What's the ROI on exploration? We know there's extreme examples of like Newfound Gold, for example, who drill 500,000-600,000 meters and come up with 2 million ounces of gold, uh, rightly or wrongly. But that's a very complex, ore body, etc. This is kind of the other side of that spectrum, where these types of deposits. The same goes for, of course, for Ivanhoe, for example. I mean, they could prove up an absolute huge system with not a lot of drilling. That's the interesting part I find. Let's say, I mean, they're probably gonna need to do a race, but let's say they include some of these deposits, they drill them down deep, etc. Who knows? Maybe this is gonna turn into, a very very large copper deposit. I mean, it is, and by the way, 1% C equivalent copper grade. I think there's quite a few mines in the world that mine around these grades. I think White Pine is around 1% copper. I think there's mines in Kazakhstan that's around 1% copper, and that's actually where there's a venture, Ivanhoe Mines or Friedland maybe. Now I think it's Ivanhoe Mines. Direct has invested to explore for sediment-hosted copper in Kazakhstan. So this is, this should work, and this is Sweden, perfect infrastructure. You see the rails here, for example. There's plenty of power lines. It's not far from seaports and all of that. So I would think cost would be cheap as well. I mean, I don't see it as a necessarily super high margin at $4 per ton copper, but I mean, if you get, I mean, blue sky scenario, they prove up a couple billion tons of copper silver, which is absolutely crazy. I mean, then it would be one of the largest deposits in the entire world of copper silver. Is that a guarantee? No, but it's interesting. They have their chief geologist is a Boliden veteran who's been part of a lot of discoveries in Sweden for Boliden. So there's some good people involved. I'm gonna try to be a bit quicker here. Magna, I started buying a few on this dip at around, I think it was 151, and then the market's cratered even more. Unfortunately, copper again has continued to take it on the chin. And they, recently became a copper dominant, let's say, producer from the McCready West mine. Most of it, I think, most of the revenues coming from copper, but obviously PGMs and nickel as well. So that's, I think it's pretty obvious that's, I mean, that's what the market is focusing on right now. Okay, and we talked about this recently actually on I think it was the K report, yeah. We talked that the story has gone from, because they put out some absolutely stellar assay results recently. Yeah, 14% copper, 3.5% nickel. I mean, these are, obviously you don't really care what the price of copper is if you would mine stuff like that. But that didn't really move the market that much. So it's much more of a production story in the eyes of the market. Or that's what the Mr. Market is, producer focused person right now, let's say. And if copper drops from $5 to $4. That's making this margin cash flow focused Mr. Market nervous, or at least negative, because obviously they're not going to be making as much money at $4 copper as they would do at 5. But again, let's take a step back. We don't know what's going to happen with copper. We absolutely no idea. I mean, again, if Trump wants to double electricity, and if the US is going to start onshoring, who knows how much copper that might require. And then it's like, okay, I get it. It's getting sold off right now because copper price is selling off. I can understand. I mean, that's one of the most easily explained share price declines for a company. At face value, it makes sense, right? The production today is generating less revenue than it did a week ago or 2 weeks ago. But the thing obviously is, these are ex-FNX people. They've been through turbulent times before. In FNX, they rode through the 2008-9 crash and basically changed, depending on the metal prices, what they mined. Okay, they have huge skin in the game. They just raised, I think, $33 million. $33.5 million. I don't know exactly how much they have. 35 million, 36 million. They're adaptable. They're going to be flexible. These are experts that have huge skin in the game. They're not going to be taking too many chances, if you know what I mean. And of course, the big thing is that, yes, it's being sold off based on McCready West's production right now in light of the copper prices going down. But that's also obvious because the market cap is supposed to reflect all the future, let's say, risk-adjusted value of everything that Magna has. It should be pricing in the, let's say, consensus of what Magna is next year, 2 years from now, 3 years from now, 4 years from now, 5 years from now, yada yada, and then discount it back. So, with, let's say, 35 million, so they have a 210 million market cap. And they have 1, 2, 3, 4, 5, at least advanced, past producing projects that could get up and running quicker. I mean, they have 5 assets, well, 1 is in production. They have 4 additional assets that could get into production quicker than almost any junior out there could with their projects, and most of them have 1 project they could get into production. That's advanced enough, you know. So how much bang for the buck are you getting? Well, if again they end up getting 1, getting 2, getting 3, getting 4, getting 5 projects into production over the next, well, let's say they add 2 in the next 3 years. Let's say they add another one in the next 5. Then another one in 6. Maybe they do some acquisitions, yada, yada, yada. I have absolutely no idea how Magna's going to look in a few years. But I think there are quite a bit scenarios that will make this market cap look cheap. And that's the thing, again, and I talked about this before. The market can focus on one thing at any one point in time. So there's some main driving narrative that the market prices a company based off, based on. Now I think it is McCready West and its revenue, let's say. And right now it's gone down thanks to the drop in copper prices. But it also obviously, again, not only allows anyone to buy McCready West at a lower price, you can also, it also means you buy everything else at a lower price as well. And any future potential acquisition at a lower price. So, do I think Magna is going to be spitting out free cash flow from McCready West at today's copper prices? No, maybe not. I haven't actually done the calculations. But how is Magna going to look 6 months from now, a year from now, 2 years from now, 3 years from now, 4 years from now, 5 years from now? That is the interesting part. So I actually added some recently as well. And it's still, a top 2 or top 3 after this share price decline in the hodl folios. Because again, I think somebody said it here, maybe it was Market Plungers, like Magna is basically a bet on the management team. That's why it's like, I don't worry too much about Magna. Because whatever they decide to do at any point in time, I expect it's going to be the best decision anybody could make. You couldn't replace them with a better management team. I wouldn't make better decisions. And if we again factor in that these guys have been in turbulent market conditions before, and they just raised $35 million. Is Magna risking to go bankrupt anytime soon? I doubt that. Will they maybe need to adjust some plans if lower copper prices are here to stay for a while? Maybe. But at the same time, some of this ore doesn't matter what the copper price is. Heck, the nickel alone. .5%, 20%, 31%, 28%, 22%. Yeah, I mean, if you just kind of, I was gonna say selectively mine this stuff. I mean, some mineralization here is so high grade that I don't think, again, I don't think it really matters much what the copper price is. If you're mining, well, I don't know, 2% copper, something like that, yeah. Maybe, but if you would be mining like 8-10% copper plus nickel plus PGMs, I just have a hard time seeing that. What is copper at? $4? Yeah, that would be a problem. What one could see like this, like, okay, and this is a pretty fat fall, actually. I mean, I'm not gonna say the only, but it's like we haven't seen declines like this very often. Usually there's a counter trend rally not too long after. I mean, take this one. Yeah, okay, that was probably even deeper, but that marked actually the bottom, then it trended up. This was one fat as well, but that's still at a huge counter trend rally of 33%. Here you have, well, yeah, this was 2008. That was obviously even worse, and then finally that put in a bottom, and yada yada. and this is what kind of FNX Mining rode through. So I don't think I think Magna has a probably a even better setup than FNX had. I mean, assuming we don't drop to, I don't know how low, you know what I mean? But hey, in that case, maybe you put everything on pause for a while, you know? And then, okay, when that is over, come back, make a lot of money, build some mines, and for a while you're gonna be mining it, you know, new all-time highs or whatever. Or maybe nickel have rebounded by then, so you're mining nickel rich, yada yada yada. Yeah, I'm not too worried about Magna. Again, it's like obviously the risk reward, let's say, is that if this doesn't get much worse, and well, regardless almost if it gets worse, like Magna makes through it, then I mean, then this is just, I mean, probably going to be a ridiculously low valuation for what Magna will become in that case. I guess that's the takeaway. I mean, again, what is, how much is this priced in that, I mean, or how much is priced in that Magna is going to become a multi-mine producer with cash flow? Not much, right? So yeah, and I can't predict shit. I can't predict the copper price. This was, yeah, tariff related, and again, who knows? Maybe there's gonna be an investment boom. Maybe copper is gonna be at $6 within a year. It's like you never know. If that happens, well, then you can imagine what happens to Magna. It's like you never know. It's like, okay, what's priced in, what's not priced in? Is Blue Sky priced in into Magna? No, obviously not. And now again, it's simply following. It's being traded based on, I think, McCready West and the market looking at it as a copper producer. So it sells off with copper. Perfectly explainable, but then at least you know why it's selling off, and then you can also ponder the fact that, well, okay, if that's what's driving it, then I mean, how cheap is Magna based on the sum of its parts in that case? And all of these, thankfully, can get monetized. That's the thing. It's not just a multi-asset junior that has, oh, we have some grassroots projects which may or may not even have any metal, and if they have metal, it's going to be 15 years, if ever, that we're actually going to be able to monetize it. No, I mean, Levac, McCready West is already going. Levac, I mean, that's the next one to hopefully go into production. And then there's Podolsky, and then there's discovery potential, etc., etc. So that's, yeah. Nobody has a clue. Nobody exactly knows what's gonna happen. I like Magna a lot. It's not well. I mean, it's kind of the only nickel stock I think I have right now. Might have some. Whatever. I forget the name of the junior that I'm down a lot in, the high risk high reward one. But yeah, again, I think Magna Mining, thanks to the management team and asset base, over the coming years, I think this, if things go well, I think this could become a really cool story. And what I kind of like the most, that it, I mean, I think we're all, as Magna shareholders, I think we're all getting the sense that Jason and the team are not even done yet, that they have even bigger ambitions. And based on what people write in the forum, etc., including Doc Jones, that there's even more stranded assets around in Sudbury. So it's not. I think this picture here might change as well. And actually, the really interesting thing is like, and I think Jason and Paul have said this themselves. How were they able to consolidate all of this? How were they able to buy Green Hill for such a low price? How were they able to buy Podolsky, Levac, McCready West, and all of that other, all the other assets for such cheap prices? Well, nickel was in the toilet, right? So things are cheap. Well, maybe, just maybe, this uncertainty, let's say, and the dropping copper price is going to make it even easier to acquire some additional assets that the majors don't care about too much, or whoever is out there who's sitting on these assets. And they might, who knows, again, given the drop in prices, that they're like, oh, hey, yeah, take this for, I'm just making up a number, 5-10 million, and it's like, okay, thank you. They have been, the deals they made have, looks to be absurd, but let's say, okay, they did that. So you get it even cheaper, or if you don't get it cheaper, you get it done quicker. And all of a sudden you have an even bigger asset base, thanks to the current conditions in the market and metals place. And who knows, like the drop we saw in the Magna stock when it went down to 40 cents, and I said at the time, longer term, this might be much better than if Magna just kept on creeping higher. Because now you get a shot at a much more de-risked Magna, a Magna that now has Green Hill, not just Shakespeare, and a Green Hill that's more advanced and all that, to buy it at such a cheap level. So if you actually, let's say, reshuffle and actually bought that dip, understanding that it's probably cheaper at 40 cents at that point than it was at, let's say, 30 cents 2 years before, who knows how this is going to look in the future. Obviously, Magna is worth a lot more now because they have more assets. Their market cap has gone up as well. But again, it's like with a good management team, the surprises tend to come to the upside, and they've shown their acquisition skills are absurdly good. So maybe they're gonna bring out, maybe they're gonna do a acquisition that's gonna be able to go through because of the current conditions. Maybe that acquisition is gonna turn out to be worth 200 million in the future. So you never know, really. You never know. Not with as good of a management team as this. Sometimes bad times is actually good, especially for a consolidator, acquirer, of course, if the things they buy is cheaper and gets easily, it's easier to make a deal. That's what's interesting, because that's not showing up in a presentation. You can't really touch on that. You can't do an MPV on their knowledge about the basin and well, I don't know if you call it basin, but you know what I mean. It's like, but that's something we should account for as investors, that there's free optionality in a sense on the management being able to quote steal even more value. So that part of the value creation spectrum, or a quiver of arrows, or arrows in the quiver, might actually become easier given the current market conditions. Something to ponder. Again, it's like our job, in my opinion, with every investment, it's like, it's good to figure out what the market is thinking about. If you figure out what the market is thinking about, how it's thinking about a case, what it's focusing on, how it's valuing it based on what it is being valued by Mr. Market, then you can also kind of figure out what you might be getting for free. What's the actual long-term risk reward here? If the market is focusing on one thing, one asset, based on short-term metal prices, it's not really thinking about everything else, right? Exploration potential, deal potential, yada, yada, yada. That's the thing. The market is short-sighted, tunnel-visioned, and can't really value optionality. But if all those things I mean, again, it's like, okay, if the market only cares about McCready West right now, let's say, okay, it does care about the other assets, and let's say Levac, let's say that we're getting to production next year. That's typically also too far off for the market to care about. So not only doesn't it, let's say, put much value on the peripheral assets, but it's too far off in time. So the thing is, obviously, if you fast forward, it's like, okay, let's say a year from now, again, let's say copper prices are at $6, and all of a sudden Levac is in production as well. Will that matter? Yes. That's going to show up on the cash flow statement, etc., etc. That's something the market can easily see. It can calculate EV divided by EBITDA, yada, yada, yada. So if you think that has X chance of happening, let's say, but the market is not pricing that in, then you can see how you can get alpha by paying attention to the assets that the market is not caring about, and you're looking farther ahead than the market will price in, because let's say Levac is up and running in, I'm just putting 18 months. 17 months from now, I think the market will start to care about that fact. Who knows? Maybe that alone, that patience arbitrage, let's say, is good for 100% return. That's a pretty goddamn good return. And that's assuming, let's say, no other exploration success, no other acquisitions, not sky-high copper prices or nickel prices, etc. Anyway, I think this is Magna is, I think, a good case, because you see some, you see example of how the market is reacting, and you can figure out what it's putting value on, what it's focusing on, and you can kind of consider what it's not focusing on, and then it's up to you. It's like, well, okay, shouldn't it be focusing on that? Well, I mean, if the plan plays out, which is to bring Levac into production and Podolsky into production and Green Hill into production, and one day maybe Shakespeare into production, yada yada. Obviously, I can see some alpha there. Yeah. Anyway, I thought I was going to go through even more cases, but I mean, it's going so long already. Typical. It's like I always plan to be, well, not do rants as long as this. But I think, and I also think it goes to show. It's like I don't want a good case to be needing precision. I don't want to be, it's like, oh, I'm gonna make money if these exact things happen. If they happen, I'm gonna make 100%. And that's like, oh, that's the blue sky scenario. No, I like stuff like this, where it's like, well, in 5 years from now, there's a scenario where Levac, McCready West, Podolsky, and Green Hill is up in production. There's a scenario, well, in that scenario, it's like nickel prices are rebounded. Copper is at $6-7. Am I going to make some money in 5 years from these levels if that turns out to be true? Yes, I think so. Maybe a lot. How much returns would you be happy to get in 5 years? I mean, I don't know. The market average is 9-10% per year, and from here on out, I mean, I think the consensus is, historically speaking, it's not going to average 9-10% per year because it's so overvalued. So I mean, if you get 200% in 5 years, that would probably beat the market handedly, I would say. S&P 500, yada yada. I mean, unless it actually becomes, a death of the dollar type situation, we end up in with Zimbabwe dollars and everything goes up 1,000%. But I hope you get my point at least. Like I want to see what can go right. What's the degree some stuff can go right? If I see, well, there's a spectrum where it's like, and of course the downside is always limited to -100%, but it's like this picture here brings a lot of upside in the hands of this management team if you give them 5 years. If I give them 5 weeks, they can't possibly unlock all of this in 5 weeks. So I have no idea if I'm going to be up or down from these levels in Magna in five weeks. 5 years, I think I'm going to be up a lot or not at all. And I think odds are that I'm going to be up. So I would think, I think I'm somewhat balanced in these statements. So yeah, I mean, long story short, I think market is focusing on McCready West. I still think this is one of the most fascinating cases in the junior space, and you have some of the best. Well, you have the absolutely best team you could possibly want, and you have this. That said, team has like huge skin in the game, and they just closed a $35.5 million raise. So they can survive some tough times, I'm pretty sure. Anyway, thanks for listening. Consider me biased. I own shares of all companies I mentioned. Some are banner sponsors, some might become banner sponsors, etc., etc. Not investing advice. Don't invest money you cannot afford to lose. This is not investing advice. This is not a buy or sell recommendation. Yada yada. Thanks for listening. Bye.